So my name's David Bibby. I'm the CEO and co-founder of Hypercharge Networks, based up here in Canada, in Vancouver, British Columbia, with offices here in Vancouver and Toronto as well. We're a fairly early stage EV charging company. We're publicly listed on the NEO and on the OTC as well. You can see the symbols there. What we do is we provide smart EV charging solutions that help our customers grow their business and accelerate the adoption of the electric vehicle and the shift towards a carbon neutral economy. And these are all really important points to us as a company. We think that helping our customers find a new source of clean revenue is important. Accelerating the shift towards a carbon neutral economy through the adoption of electric vehicles is also really important. So I'm delighted to be here today and able to present to you all and tell you a little bit about the Hypercharge story here. How I started, I spent the last 6 years working at the world's largest Caterpillar dealer here in Canada, a company called Finning International. And I bought my first EV in 2019. And I just loved it. You know, the day I test drove it was the day I bought it. And it's the only vehicle I've ever bought that got better after I owned it. And I'd spent the 5.5 years at Finning working on digitizing the customer experience and building large business lines within this heavy equipment industry. And it was all based on digital technology. And really what we were trying to do was improve our customers' performance and lower their emissions and increase customers' performance and lower their operating costs. Those were all key things that we were working on, and we assembled a large team of digital innovators there. And meanwhile, I bought this electric vehicle, and I could just see the shift that was coming, both in heavy equipment, but light, medium duty, as well as in our personal lives here. So ended up leaving the big corporate job in a great company to form Hypercharge. So where we sit today in the electric vehicle segment is that there's massive growth here. I'm sure that everyone on this call either is driving an EV or their next vehicle, they're thinking about it becoming an electric vehicle. And here in Canada, currently we're at about 8% of all new vehicles sold are zero emissions vehicle. And most of those are battery electric. There's very few hydrogen, but there's some. And so by 2030, 60% of those vehicles sold will be zero emissions vehicles, most of those battery electric. By 2035, it'll be 100%. And it's very similar in the US as well. A lack of EV charging infrastructure is cited as the #1 barrier to adoption. And that's the problem that we solve. We're here to make sure there's simple, reliable, effective EV charging infrastructure in place for all of these consumers that are buying electric vehicles over the next 10 to 15 years. So this next slide is just showing, kind of in a different way, what the priority here is and the number of electric vehicle charging stations that will be required to meet the demand. It's expected that that's going to grow 930% by 2027, and it's in the millions of chargers that are required to solve the demand. Looking at the market, over 30% compound annual growth per year in this space. There's tons of support from the governments around the world, in Canada and in the US. There's subsidies, there's rebates, there's tax exemptions, and there's also those are the carrot, I guess, if you will. The stick is fixed quotas. So London, as an example, is said that they'll no longer allow internal combustion engine vehicles to enter the city in the next decade. And so you're seeing that too as well. So the governments are going in and helping fund the electrification, and we participate in that as well as a company. We help our customers apply for grants. In the case where we're putting up the CapEx to put the chargers in, we participate in those grants. In Canada here, you can get up to 50% of your electric vehicle charging stations paid for by the government through the grant program. In the US, there's $7.5 billion available through a few different programs here to help support the market here. So massively growing. We believe that EV adoption should be frictionless, and it's got to be simple and reliable no matter where you recharge your vehicle. This was probably the biggest thing that I saw as a consumer coming into this market, was that, you know, in some instances, the experience was amazing. In many instances, it was not. And the industry as a whole has already, I think, got a negative perception of how reliable the charging systems are. That's why we're focusing on that from day one, that we believe it should be frictionless and reliable. We have solutions for every property in every segment. We have software, we have hardware, and the hardware ranges from the smallest chargers that you would use in your home all the way up to the fastest DC fast chargers that'll recharge your electric vehicle in under 30 minutes. And we back that all through services and support here. So our business model, we have 3 different ways that we go to market. They all have a SaaS component, a monthly recurring revenue model with them. So we sell hardware, but we manage everything that we sell. And we do that through connectivity and software. And so in our different business models, we have a purchase model where if the customer wants to own the asset, they can certainly do that. We will always continue to manage it, and there's a monthly recurring revenue to support that. We also offer leasing. If they don't want to put up the CapEx, they can finance it. Or we also offer Hypercharge as a service, where we'll put the capital up, we'll deploy the chargers, and we'll earn our revenue back through utilization by the consumer. And effectively, when I said at the beginning that we want to help our customers increase their revenue, in the case where they look at deploying chargers, they can earn revenue from their customers. And it's also very important to note that, you know, when you think about EV charging, it's a very ESG friendly thing to do, as far as if you're a property owner or manager. Generally higher, more affluent customers are typically buying EVs today, so it attracts new customers who spend more in your location. It's a big paradigm shift for the existing energy companies, because, you know, would you rather recharge or refuel your vehicle at a gas station on a corner, or at a mall where you could, you know, do your dry cleaning, get a coffee, or buy groceries? And, you know, we're seeing a lot more property owners putting in EV charging as an amenity in those locations. So we focus on 3 different segments: multi-unit residential, commercial, public charging, and fleet. And people, it's a paradigm shift for those that don't drive an EV already. Generally, what happens is you'll recharge your vehicle at home or at work. Those are the 2 primary places that most people refuel their car. And then we all hear about range anxiety and, well, how far do these things go, and where do I charge them, and how long does it take? And, you know, those are questions that I get every day. And that is the problem that we solve. But most times, when you're thinking about long haul travel, that's where you need the high capacity, high throughput DC fast chargers. And we do already have a number of those out in the field. And the 3rd segment is around fleets. And so there's lots of press on companies like Amazon and Hertz Rental Cars, an example, are really pioneers in the space and moving quickly to electrify their fleets. But most fleet operators are not yet. And I was really surprised by this. And it was something that I thought, you know, given my background, I was really all in on fleet electrification, especially in light to medium duty fleets. There just hasn't been enough supply chain yet to electrify the fleets. And so, while most fleet operators are doing pilots and we're working with them, that segment is largely untapped, and one that we're going to go after in a big way in the coming years, and to help those fleet operators and owners electrify their fleets. And over time, because this is a transition, you know, we don't expect that everyone's going to offload all of their, assets today and move to electric vehicles. No, it's going to take time. And we generally want to work with our different customers and help them electrify as they electrify. So our team, been really excited about having a great team of people, both on our leadership team and on our board. We've been fortunate to have a number of sort of, people from different industries with lots of background, some from the EV charging industry, some from software, others from, other industries as a whole, real estate, et cetera, to help build the team here. Our board, as we went public, we brought in some new independent directors from investment banking. Trent Kitch was the founder of Saks Underwear and a number of companies. He's had a few successful exits, and he's a really great partner to mine, as is Vitaly Golom and our other founders. So team is critical to us. We've got a very experienced team. So we started in June of 2021. And really what that was, before I quit my day job to found Hypercharge, I wanted to make sure that we had a business model that made sense. I set a target last year in 2022 at $1 million revenue. Delighted to say that we blew past that. And we only launched in April. We had 1.7 million on a target of 1 million, 1,491 ports sold, 500 delivered in 8 provinces, and our first US state, so 5 states. US expansion is critical for our future, and I expect that, as a company, we will continue to grow and expand Canada. I'll come back to some of this later, but when I think of our priorities for 2023, we're focused on expanding Canada. We're expanding into the US. We formed the subsidiary down there, and we're looking at opening our first operation in the mid part of this year. And then also unit economics are really important to us as well as a company. Obviously, the market has changed a lot in the past 2 years since we founded the company. We know that as a growth company, it's important not only to focus on growth, but also on our unit economics, and we're doing that from day one. I've always done that, so it's not something new to us, but really important here. So as we come back to some of the key channel to market, we went in Q3 of last year, we started to build out the Hypercharge preferred partner channel. And, we have direct salespeople out selling to, large opportunities in both Canada and the US. What we've done is activated a partner channel, though, primarily of electrical contractors, and they love working with us already, because we really do pay attention to the details that help make them more productive and help them build their businesses. And so we're going to continue that channel, and we'll continue our direct channel. Our growth trajectory for this year, we have some very aspirational growth targets. On the ports sold, we're looking at 200% growth, and on the revenue, 300% growth. And, we're already off to a good start this year. And we're learning a lot about, the market and the seasonality of the market as we go. But our customers and our partner channel is very supportive of what we're doing as a company. Just recently, I got some really interesting news from our partner channel. We had a customer who called us, or a prospect who called us, and he said, "Who are you guys?" He goes, the sales team said, we're Hypercharge is what we do. He said he went out to get 3 quotes in the past week, and all 3 of the partners or the electrical contractors that he was talking to said, you need to go with Hypercharge. So I was really just delighted to hear that, because to me, that means what we're doing is working. The industry is growing. So this is the great thing for all EV charging companies, but especially Hypercharge. 30% compound annual growth is huge. I'd be hard pressed to find another industry out there right now that's growing at that level. And so that bodes very well for us. We build a pipeline. We've got the key thing for me is process to scale. So it's not only having the right people, but it's putting the processes and disciplines in place that will allow us to scale and to get feedback from customers on what we're doing well, but more importantly, where we need to build as a company and improve. So we get a lot of feedback that way. We have a strong opportunity pipeline. This grows by probably about anywhere from 300,000 to 400,000 a month. And we're not going to win all of those opportunities, but we're winning more than our fair share and competing very well with already established players in the space every day. So that is the bulk of the presentation here. Don't know how am I doing for time. I think I'm pretty much right on time here. So I'll open it up for questions.
Well, you're right, David. Yes, you are very good on time. Absolutely. And so we do have at least one question from viewers that I'd like to bring up first. And thanks for that great overview of Hypercharge. So the first question asks, noticed your Devon, Alberta contract. Congrats. And with municipalities, do you need to go through an RFP process?
Yes, yeah. The short answer is definitely not in all cases, but in many cases. We're working on lots of material to help make that efficient. But yeah, we win RFPs all the time.
Wonderful. So let's see. Another question. Are you having supply chain issues, and how do you plan to counter that?
So during the pandemic, for sure, supply chain and shipping costs were issues. We placed a fairly significant bet back in the last fall to make sure we could secure a supply. So that's allowed us to meet the demands. And one of the reasons we win more business is because we can meet those demands quickly. And but on the level 3 chargers, those are generally built to order, so they take a little bit longer. And now what we're seeing is supply chain is becoming less of an issue than it was, say, 12 months ago.
Okay, so that was when you made that decision, I guess, a bit of a chicken and egg thing, but it sounds like you went the right way.
Yeah, it was certainly a bold bet, Peter, but
Sure.
we felt important that we needed supply, and it paid off.
So we also have a question. What is your main competitive advantage or moat? What would you say?
Yeah, I think that I get asked that question quite a lot. It's a great question, and really what we offer is a quality solution at an affordable price, competitive price. And, it's easy for people to say that. And, it'd be nice if we all said we had a closed ecosystem like Apple or Tesla. But the reality is, like, we differentiate on service and support, and our products are priced competitively. And so that's where we win.
Well, based on that anecdote of 3, I guess, installers recommending to go with you is certainly an indication of that level of quality.
Yeah, and I think the other bit to add is that we've press release or announced this too much, but like with my background around building software ecosystems, like connecting things together, we're spending a lot of our energy on innovation in connecting this. So what we want to do is make it easy for the consumer to get their vehicle recharged when and where they need it. And so where we'll spend our R&D dollars is less on the hardware side, because that'll ultimately become a commodity, but more on the software side that allows for us to add differentiating features and functionality. I'll give you an example of where we have an advantage today in a multi-unit residential space, where our platform will allow us to load share across a segment, a circuit, up to 4 chargers per circuit. And that's really helpful in a retrofit scenario where you may not have the capacity at the panel for all these EV chargers. So we've got some smarts there, and we continue to build those out over time.
Maybe that could become a new revenue stream for you.
Yeah, We think so.
What are your capital requirements for the rest of the year?
Yeah, so we did a round in June of last year, and so we're fully funded for the year ahead based on our growth plans. So we're okay from a capital point of view for the strategy that we have in play right now. So what we're learning, like any small company and a growth company, is, do we have the right product market fit? Do we have the right business model? What do we need to improve in any of those things? And then how fast can we scale and do it in a sustainable way? So we want to go fast, but we want to make sure we do it smartly.
So here's another question. And speaking of scale, the viewer asks, CapEx heavy businesses are tough to scale and have long break-even periods. As a listed company, how do you ensure you maximize shareholder value?
Great question. I love that one. So you're right. Absolutely. This is a fairly capital intense business. And I don't know if it's a long break-even period. Like if you look at Amazon as the case study that I was thinking about, like they were measured in decades, right? And I think they obviously they turned a profit in a big way. So we're not Amazon, of course. And so we have an eye on growth and profitability. And for us, it's about measuring the horizon over the next several years to hit the tipping point for that. So we think, like, as a company, maximizing shareholder value is about growth and scale. And that's where we're focusing our energy on. And especially when I look at the US market, it's 100 times bigger than Canada. And they too are somewhere probably even less than 8% of all new vehicles sold are electric today. And all of the OEMs, the other car companies, have said they'll no longer produce another gas-powered car in the next decade. So yeah.
I'm curious about something. Can you compare the number of EV charging stations in somewhere like the US versus China?
I cannot. I can tell you that I can compare it a little bit in the US, specifically around the States. Like California has probably 10x the number of chargers than any other state. So I don't know what's happening in China, but I can also say a little bit more about Scandinavia in Europe, and Norway, Finland come to mind there, that they're way ahead of us. And those are two countries that I look to as to kind of where the future of our industry could go.
Okay. Another question. I'm curious about how the U.S. Infrastructure and Inflation Reduction Acts, what the implications are of those for your company.
Yeah. So essentially, right now, 2 of our 3 product lines are supported and meet the requirement there. The third one, we're working on a strategy to support it in time for when that actually comes into play. The Infrastructure Reduction Act is where a lot of that grant money is focused. So we, as I said, participate in that too as well. So we're always looking at regulation and what's coming to help sort of orient our product strategy around it.
David, do you feel threats from new alternative fuels like hydrogen, for example?
No, I don't. Really, I don't at all. I think there's room for hydrogen, assuming that it takes off, which it should. I think look, hydrogen's great. It's just really expensive to produce right now. And there's some new technology and innovation coming, we think, but it's been if I look at companies like Ballard as an example, right up the street from where we are, or were, no, I think there's lots of opportunity for both. And I think that's why when I was talking about zero emissions vehicles, I wasn't talking specifically only about battery electric. I think as we try to reduce our climate impact, there's plenty of room for both.
I'm curious too, this is probably a very short and quick, easy thing for you to answer, but do plug-in hybrids use the same charging network?
They totally can. Yeah.
Okay, so that would make no difference in terms of technology and adoption, et cetera.
No, not at all.
Okay. Here's one. What's the biggest challenge for you to execute on growth?
Biggest challenge, I guess probably for me, it's time. I really think that's, I was just chatting with someone here this morning about priorities and time and focus. There's a lot of opportunity for us to innovate, even outside of just EV charging. And being a small team, it's about creating a focus and a sense of urgency to build what we're doing. And then, we don't have a balance sheet of some of the companies I've worked for. So, it's also that side of it too.
Here's one also. You did touch on it a little bit before, but maybe you can expand a little. What kind of product and service innovation can investors and clients perhaps also expect over the next few years?
From Hypercharge or the industry?
Yes, from Hypercharge.
Yeah, well, I touched on this already a little bit. Certainly in the software and the platform side, plenty of innovation to come there for us. We're already doing a number of pilots, which I think will have a really big impact for our customers and also for our growth plans. So that'll be a key piece for us.
Okay. Are you planning to have carbon credits / clean credits as a source of revenue as you're helping to offset carbon emissions?
Potentially, yes. Yeah, we're modeling that right now. And to do it at scale is what we want to do, though, not in a small way. And I mean, that market is growing. It's huge potential for us. Yeah, it's something we're looking at.
And I mean, I know it's early, but do you have some idea, or can you give us some indication of how you might monetize it? In what form you could monetize that?
Well, certainly we could trade the credits, and that's probably how we might do it. Like if we have enough scale, or when we get enough scale, we could find ways to trade those.
Okay. So we have another minute or two. Maybe you can just wrap things up for us and give us some of your final thoughts on Hypercharge and what investors and viewers here today can look forward to.
Yeah, great. Again, thanks for your time today, everyone that's sat in and listened to us. We'd love to, if you have any questions, you can reach us at invest@hypercharge.com or come to our website and find us there. We'd love to hear from you. We're a fast-growing company in a fast-growing segment. I want to make sure you really understand that we've got the team that is experienced and is executing. And, if you look at all of our marks that we've set our goals, we've hit them all. So we're good operators and executors. Certainly encourage you to do your homework and due diligence on any investment, including especially us. But we see huge potential for this market and lots of opportunity for growth and innovation at Hypercharge.
Well, with that, David, I'd like to say thank you. I really appreciate your overview of Hypercharge, and we've gotten, in your case especially, a lot of great questions in. And thanks as well for your responses to all of those, and look forward to catching up perhaps at a future conference.
Amazing. Thanks, Peter. Thanks, everyone.
Thanks so much, David.